Hello. So guys, I'm running a mic test right now. So if you guys have joined in the webinars, either on YouTube or on TradingView, wherever you can see me live, definitely let me know how's the audio and how is the video feed as well, of course. And I'll just run some tests on my own over here. So at my end, it looks like the audio as well as video is running fine for YouTube as well as TradingView. I'll do some further preparations here, like open up some more tabs which are required during the webinar. That will also allow people to join in who have not joined in yet. So guys, in 10 seconds or so, we will start the things. So hold on for a bit. So everything looks good at my end. I will just. So everything looks good at my end. I will just start off now and final check here. Start off now. Okay, so there may have been an echo here because I was just testing. So guys, before we do everything or anything, here is the quick disclaimer on screen suggesting that all content presented here will purely be for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, then you yourselves will be liable for your profit, loss of profit, and rest of the stuff you can just check on the screen. So now that we are done with the legalities here, let me give you a quick introduction about who I am and a little bit about my work. So guys, my name is Nirav Yadav. I'm the admin and owner of 50eyes.com, which is a website where I have been trading, sharing my views on trading, as well as Elliott Wave, which is my area of expertise for 7+ years. All these webinars are also posted here. As you can see, we are currently streaming this 17th webinar in this series of these trading opportunities webinars, right? And webinars which were done before this, that is the 16th, 15th, 14th, etc. You can already see them listed over here. Alternatively, you can also visit my YouTube channel called 50 Eyes Market Analysis and check out the same over here. All the live streams are present here in this playlist: live webinars, trading opportunities, or you can also click on live here. Excuse me. Also click on live here and check out all these streams. Right. I'm also the author of the book called Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Wave. It is available on Amazon's Kindle platform as instant access. You can see the name here and the title here. Further on, I am also the author of Elliott Wave's video course, and I also run live classes called Training Program LT. Right. So you can check all that on my website by going to courses and checking out these links. But one most important thing that I want to point out before we move to the actual webinar is that for these 6+ years, I have been keeping a track record of all the webinars that I have done. And as you can see, in 2016, we had an accuracy of 83.34%, in 2017, 87.5%, 2018, 84.6%, and 2019, 84.88, 2020, 88.52, and 2021, 82.22. So why am I showing you this accuracy and all that stuff is because generally in this field of analysis in finance, people don't even have 60% plus accuracy, which is, even if someone has that, is called very high. And I have here 6 years consistently keeping it higher than 80%. So just shows my area of expertise. And basically it just shows my level of expertise in this field. So anyways, we are done with the introduction here. Let me just run you down on how we will be going through with this webinar. So the first thing we discuss is the chart of Euro USD, which will be then followed by the chart of EURCAD, followed by USDJPY, EURJPY, crude oil, gold, S&P 500, Nifty 50, and Bitcoin. So every time I discuss a chart, I will then ask you guys if you have any doubts. You can just post that in the comment section. If not, we will then move on to the next chart. And also, please make sure you post comments or queries only related to the chart that we had then discussed. Right? Do not post unrelated questions here. That creates unnecessary doubts and wastes everybody's time. Okay, so let me get rid of this events latest news things. Okay, so yeah, so first chart, as you can see over here on screen, is Euro USD. And if you have been following me since the last few trading opportunities webinars, like the 16th one or 15th one, then you may already know that our bias was that we have completed an upside leg over here, right? And the main view is, or the view which is common among both hypotheses, is that we are expecting at least one leg down here, which should at least be equal to the first leg down, right? And the reason for that is that at this point in time, which is around 1.07387 price, and time is 15th December 2022, we expect that a leg up has completed in a triple zigzag formation. And if that is actually the case, then that would suggest that this market can go much lower, right? However, there is a counter view which is suggesting that the upside is still under continuation, and that counter view, although is suggesting more continuation towards the upside, but is still suggesting small downside like before the upward movement continues. So based on that, I'm of the view that we expect one more down leg before we see either continuation downside or upside. So we are just waiting on this one, and once this leg is formed, the way it forms, the speed of it, and some other price action levels would suggest the further progression of this market. So basically, it's a wait and watch on Euro USD. And although currently we are expecting sell side, these sells are supposed to be taken with caution, because markets won't always give you a 1:1. So in this particular case, for instance, we are thinking that this is an A up, and this will probably be the B, and then there will be a C. So this A down will be followed by B up, and the C will be equal to A. That's exactly what we are thinking here. But because if the market continues or decides to continue to the upside, then the generality or this general hypothesis or suggestion that A is equal to C probably might even not hold. So that's the reason I'm saying that even though we are expecting shorts have to be cautious. That is, take smaller positions with strict stop losses over here. So for me, Euro USD is actually just a wait and watch for now. We can always enter later on once there is a confirmation if the leg down is continuing or if it's just a small leg down. So that's about it for Euro USD. Not many things new, but one or two more points compared to the last time or compared to the 16th webinar. So moving ahead, we'll have a quick look at EURCAD and okay. So if you guys remember EURCAD, we were last time discussing that we are possibly going to see some more downside, right? And the problem with the whole thing was that downside was definitely there, but at the same time, the downside targets were not that huge. For instance, the downside targets were this blue lines, and the first blue line or the first target or T1 is already there. The market is already near it, and then the T2 is not that far away either. So again, technically, these are short targets. This is a sell-off currently happening, but there is one more reason I find that this price action is rather slow and not as we would want to see or as we expected, basically. So I have stayed away from this market, but so far it has followed the plan. The plan really was that after this market takes or goes below this green channel line, we will expect some sideways to downward movement, and the downward movement will have these targets. So it is still following the plans. I'm currently not interested in selling it. If something changes for me, I'll be interested in seeing that after 1.4365 is taken to the downside, which is this red alert line. And yeah, technically it's still a short. There is no long for now. And we wait for a better sell opportunity or let the shorts complete and possibly find some other trade. So not the best trade again. So still EURCAD is also a wait and watch, right? The next chart will be USDJPY. And again, guys, if you have any doubts, you can post them in the comment section. I'll be checking them after every chart discussion is complete. So USDJPY, if you guys were with me in the last webinar, which was the 16th trading opportunities webinar, then I had discussed basically the same plan. It has not yet clarified its directions. And let me just quickly have a look at USD euro. Okay, so yeah, it's good. So it's looking like we have still the WXYXZ under formation. Now, before we discuss this chart, our actual chart, let me give you a quick rundown of what I think is happening here. So first of all, we are talking about Elliott wave patterns, and if you are not familiar with them, it's okay. I'm just going to explain what's currently happening here. So what we are looking forward to is a W followed by a Y and followed by a Z, right? These legs to the downside are joined by a connecting wave X and again by a connecting wave X. So in this actual chart, we see that our W is here, our X is here, our Y is here, followed by the second X and the Z, right? Now the thing which we pointed out in the last webinar and basically remains the same for right now is that we are not very sure if this wave Z is complete. And if it was complete, then it would have suggested that the market would go up, on the actual chart as well, right? So, but because since the confirmation has not come yet for the wave Z completion, it is possible that it will go a little bit more down before giving any upside movement, right? So again, USDJPY is a wait and watch, but we have a setup here. The setup is rather simple. It suggests that if the market goes lower than the 131 level, then we can expect more downside because then we will be having a bias that Z down is still continuing. So in that sense, we can have a, let me place an alert for less than here. So once this alert is triggered, I'll take a relook at this market and probably will be interested in some selling opportunities here. For longs, as I said, I don't have any confirmation yet, so it's a wait and watch, right? And I'll just check out the comments if you guys have any doubts. As I said, You can just post them in the comment section and I'll just look at them. Seems like there is some comment on YouTube. Here S&P is, yes, Noor, I'll be checking out S&P after 2-3 charts here. After EURJPY, we'll check crude, gold, and then we will check S&P. And do keep in mind, my area of expertise is advanced Elliott Wave, so that is what we will use to analyze the chart and nothing else. And of course, obviously price action, but basically that's what I use, not the fundamentals which you are expecting as per your comments. So I'll now move ahead with the next chart, which would be the chart of EURJPY. So EURJPY, last time when we had a discussion on this chart, let me just quickly go to the important point. So this was our point of reference in the last discussion on EURJPY. And what we thought was that this market was forming a possible impulse in the downward direction from this point of reference, which is 146,748, and the date is 15th December 2022. Right. So what is an impulse here? Impulse is basically a 5-wave down movement, right? And a 5-wave down movement basically means that if the labelings are 1, 2, 3, 4, 5. So if you can check this, this is the first leg down. So this is the first leg down. Second wave is up. This is the second wave up. Third leg down. Third leg down. So what we are expecting is that maybe this is the fourth wave up. So if that is the case, then we should see this fifth leg down, and that would mean that this leg down would take the market lower than the last recent low, which is around 138.785. So if the market goes lower than 138.785, that will mean that the impulse to the downside is possibly complete. Right. So based on that, we had drawn some levels in the last discussion, which was done on Friday, right? And in that discussion on Friday, the date was, by the way, 23rd December. So on 23rd December, our analysis was that this market can reverse around the level of 141.494. Basically, this blue line, right? This was marked and discussed in the last webinar. So if you were following me, then you would have already known the level. And currently what is happening is that this market has touched this, and it is has not formed a proper reversal yet. So we will wait for that proper reversal if it's formed, and if it is formed, then we will be interested in selling this market. So here at this point, I like to just point out the importance of joining these webinars regularly. You got to join every single one of them. And if you are not already aware, I do these webinars on Monday, Wednesday, and Friday. Every Monday, Wednesday, and Friday at 2 p.m. GMT, I go live on YouTube as well as my Trading View account, and I discuss these charts. So if you want to be aware of every single twist and turn and every big opportunity in the market, you have to join them regularly. And I'll also like to point out at this point that in the last what do you call 2 weeks, we have taken 8 different trading opportunities and pinpointed them on charts in live webinars. Okay, so just pointing out that 8 different trade setups we have discussed, and these webinars, keep in mind, are free right now. Content like these are always behind paywalls. I know that for a fact, but you are getting all this for free, so make sure to make the best of it, right? So anyways, I got deviated a little bit there. Getting back to our analysis of EURJPY, so as I said, we don't have yet a confirmation of this wave 4. We are exactly at the point where we expect a possible reversal, but we don't have it yet. So what does that mean? That basically means we wait for the proper reversal. Next thing is that we wait for this exit of the red channel. So you see, I just drew a red channel here. Let me just actually get rid of the count. So yeah. So now this will be an orange channel. So in this parallel channel, once we see a break below this lower trend line, that will be a sign for sell-off, right? So that will be a sign for sell-off with the stop loss as the last high. So if let's say the market reverses directly from here, then once it goes below this parallel channel, then we can place our stop loss over here, and that will be a setup here, right? So this is what we are looking for, and that's why I have made that channel over there and placed the exiting channel alert on TradingView. So EURJPY, I think that's a rather detailed discussion. I'll wait for you guys. If you have any comments or doubts, you can just post them in the comment section. Also, guys, if you are understanding whatever I'm discussing, I will appreciate if you can type in clear or understood in the comment section, right? So that way I will know that everybody is on the same page. So hello, Jack on TradingView, and Noor is saying, thank you, sir. I'm in your course, learned a lot from there. Thank you, Noor, for the quick comment there. So, guys, if you have any doubts, as I said earlier, I'll wait for a few seconds, and the reason is that we get a few seconds delay, right? So, because of that seconds delay, we are not able to catch everything live. You know what I mean? That is when I say that type it in the comment section, then if you guys hear it after 50-60 seconds. So that's why I'm waiting for a few seconds here. Okay, I got a comment here. Nikosi is saying clear, super. Okay, thank you for the confirmation there. So in that case, let's move ahead with the chart of crude oil. So let me quickly load that on the screen here. CL chart. Okay, guys, so there it is, the chart of crude oil on our screens here, and it is exactly following the plan as we discussed in the last webinar, right? So let's see what was the plan and what is happening here. So again, guys, one more thing I'll point out, I'm not going to discuss it from the very what do you call longer time frame perspective, because I have discussed it from longer time frame perspective in so many webinars. You can just go back 2 or 3 webinars, like check the 13th or 14th webinar, and you will find me discussing it on a higher time frame and taking a look at the bigger perspective. So right now what I'm going to do is take it from this last point of reference, which is at the price level of 70.311, and the date is around 10th of December 2022. So from this point of reference, our analysis was that this market is supposedly following possibly an impulse or a diagonal in the upward direction, right? And we had some targets here. The target minimum was at 79.311, and the next target was this white zone, which was around 82.164 to 84.862, right? So however, when the market touched our target minimum, I came to a new hypothesis, or I did the analysis or redid the analysis and figured that it might be doing something like this. So if you guys are not familiar with Elliott wave, then simple price action wise, you call this a wedge pattern, okay? And in Elliott wave, we call this a diagonal pattern. So what happens in this kind of pattern is that the market will give you 5 waves. So this will be your first, this will be the second, this will be the third, the fourth, and the fifth, right? Once these 5 waves are complete, the market will fall down, right? So now what is happening is the possibility remains at this point that either this leading diagonal or diagonal, which you will call a wedge pattern, is complete, right? If this pattern is complete, then we can see a sell off here, right? The second thing which can happen is that this market is still following and heading for the upper count or the upper price level, basically, which is this white resistance box, right? Now, if it is doing that, then it can do it in multiple ways. Okay. So, long story short is that the minimum upside or the safe upside is already complete now. So, I personally am going to wait a little bit here And also I would like to point out that we were able to catch this upleg, right? And we were able to catch it. You can just check it in the last 2-3 webinars. We were able to predict it and whatnot. So again, my point being, you need to attend every single one of these webinars if you want to catch these trading opportunities. So coming back to the current analysis, as I said, the safe zone to the upside is over. It can still go higher to this level, to this resistance zone, right? Above 82, basically 82 to 84.96. But I do not have evidence as of now that it's heading there or not. So what I'm going to do personally is I'm going to just wait and watch the price action over here and see if the market goes down. How is it going down? Is it going down with too much strength? Is it going down very weakly? That is with the slow and choppy movement, and based on that I will form further deductions, and we'll discuss it in the next webinar, which will be on Wednesday 28th December, right? So crude oil, wait and watch. If you were holding longs, the movement to the upside is not big, but you will have to book at least partial positions here and trail the remaining. Or actually, personally, I think it's book all and re-enter later if the opportunity is provided again by the market. So I'll just quickly wait here to see if you guys have any comments. And do keep in mind, guys, if you are understanding whatever we are discussing here, do type in clear in the comment section or understood, so that I know that we all are on the same page. And most importantly, hit the like button on YouTube and rocket button on TradingView, so that the TradingView and YouTube audience knows that this content was useful for you guys and we can connect with more people. That's the most important thing I want you to do. So there's a comment here. Strategy are you using? So as I have mentioned at the beginning of the webinar and so many times in the middle, my area of expertise is Elliott Wave. So that's what I'm using to discuss here. But you can just follow along. I do discuss the basics. So if you don't know it, it's not an issue. We do discuss it from the ground up, so you'll be able to follow along. And sir, from Madhav Guzani ji, thank you Madhav ji for the clarification here. So in that case, let's head over to the next chart, which will be the chart of XAU USD or gold against US dollars. And here the trading plan has not really changed. It is the same. Hi Priyansh. So it is the same as we discussed in the last webinar. Nothing really has changed. Our count here is suggestive that we are possibly seeing a diagonal formation here. And our diagonal formation will have 5 waves, as I just discussed on our crude oil counter. And those 5 waves, by the way, this 4 should go there at this point in time. Okay, so what is happening here is that we expect a possible diagonal in play. And the way diagonals behave is that after this fourth leg, we should see one more up, right? And by the way, if you don't know or understand what a diagonal is, basically in price action terminologies, you will call this a wedge pattern. But in Elliott Wave, there are certain more rules, right, which you have to follow. And one of the rules is that the wave 1 and the 4 will overlap each other in price. So as you can see, the 4 has gone inside the price territory of wave 1. There is an overlap. So with Elliott Wave, we have refinement of rules and multitude of guidelines. With price action, you can call basically everything a wedge. So Elliott Wave is in a sense an advanced form of price action. So let's head over and discuss further possibilities on gold. So as I said, the major thing we are expecting is that this market should take out the last high, which will be the price level of 1825 or higher, right? If it does that, then we expect that at least this diagonal would be complete. So 1825 plus or a little higher than 1825 will be our target minimum, right? And secondly, if this market is not really following this diagonal formation, then we will have evidence for it once it takes out the low. This low is around 1767 something. So roughly below 1767, we will be saying that or assuming that this might not be the exact count here. Okay. So this is the outlook on gold, rather simple, and we have confirmations on both sides. I'll now wait for your comments in the comment section. If you have doubts, you can just type it in. If your guys are clear, then please type in understood or something like that, and we'll move along with our next chart, which will be the chart of S&P's 500, followed by Nifty 50, followed by BTC or Bitcoin. So Akil is saying on trading room, Assalamu alaikum, walaikum assalam, Akil. So guys, as I said, if you are clear, definitely let me know in the comment section. Secondly, hit the like buttons on YouTube and rockets on TradingView so that more people know what we are doing here. Yeah, Nikhil, anything can happen here. I am here to discuss possibilities. And also, if you have followed our gold analysis, I have already determined the level for downside. We will be interested in the downside plays once we see below 1767 movement. So, Vakil was asking if I'm going live daily. So, I'll just like to point out to you guys that I go live 3 times every week. That is on Monday, Wednesday, and Friday at 2 p.m. GMT, right? And the charts we discuss include Forex, commodities, crypto, and indices. In Forex, we cover Euro USD, EURCAD, USDJPY, and EURJPY. In commodities, we cover crude oil and gold. Indexes, we cover S&P 500 for America, Nifty 50 for India, and crypto, we just cover Bitcoin. So these are the things we regularly follow. If you want to check my updates on them, definitely follow me on YouTube as well as TradingView, whichever is convenient to you guys, and catch me live there. And one more thing I'll just like to point out again, because people keep joining these webinars at different times. In the last 2 weeks, we have caught 8 different trading opportunities, including the fall in S&P, this rise up in gold, right? This leg we have caught, and we have caught the up leg in crude oil as well as the down leg before that in crude oil. And we have caught Euro USD up move. We have caught USDJPYs, certain moves in USDJPY, and the fall in Nifty 50. So basically, we have caught a lot of trading opportunities in the last 2 weeks. Actually, 8, as I just said specifically. So that's about it for my sidetracked discussion. Let's head over to the chart of S&P's 500 now. Yes, we will cover BTC at the very end, and I'm not covering GBP USD. And I'm not taking requests these days right now. And if the audience increases in the coming days, then I'll probably start taking requests. So you guys need to follow and show up every week until we reach that level. Currently, I'm seeing that TradingView sees 5-6 likes only. So once we cross 10 or more, then we will start doing possibly the request thing. So let's head over to S&P's 500, and what we have going over here, as we discussed in the last webinar, by the way, is a possible zigzag formation in the downward direction. So that zigzags, the starting point of reference or point of reference is 41.43. So if we remove all the clutter, this is where the market has started down leg, which we are expecting as a zigzag on 13 December 2022. And what we have so far is a possible A completion, right? B completion, C completion. So zigzag may have completed. This is, by the way, guys, keep in mind the lowest probability scenario. That is, I do not believe that this is what the market is doing. So what I think the market is doing really is, and by the way, one more point here, that if you do not know what a zigzag is, then I'll just like to point out that a zigzag is a pattern which looks something like this: A leg down, B leg up, and then C leg down. So it will look roughly something like this. There are many characteristic traits and properties of it, but I'm just giving you a rough idea so that you can follow along this analysis. So in this particular case, I think this A leg is complete over here, and this B leg is probably still continuing. That's what I'm assuming. So in that sense, I'm thinking that this B wave can continue within this box range. That is, the price action within this range could still be the B wave. It can form multiple different wave patterns, multiple different formations. It could be a flat, it could be triangle or complex. So it's not much point discussing which exact pattern is it forming, but my bias is that as long as the market remains within the side bound range of 38.97 to 37.79, we are going to assume that it is possibly continuing the wave B formation. Once the wave B formation is complete, as we will follow it along in every single webinar which we do, then we will be looking for some selling opportunities. So that basically means for S&P 500, we are swing short, right? And the exact selling levels which we will be interested in is that if the market goes below 37.80. So what I'm going to do is place an alert below 37.80, right? If the market goes below this level, then we will be looking for selling opportunities. If not, then as long as it remains within this box range, we are going to assume that our analysis is still forming, still followed, right? That is my take on S&P's 500. Next, we will discuss Nifty 50. If you guys have any doubt on S&P's 500, you can post it in the comment section. I'll just wait a few seconds. And one more thing, guys, before we proceed to the next chart, which will be Nifty 50 followed by Bitcoin, I would like to request you guys to, one second. Yeah, so I would like to request you guys to hit the like button and rocket button on TradingView or YouTube, whichever platform you are on. Okay. So let's quickly head over to our discussions. I'm just checking out which chart is the one being followed. So there it is. We'll load that on screen. Okay, guys. So this is the chart we are following right now on Nifty 50. And as you can see here on screen, this is a possible wave for which we are assuming in play. So let me just quickly remove everything and explain everything from the bigger time frame perspective. So what we are assuming here is that we have an impulse in the downward direction. 1 second, 1, 2, 3, 4, 5 for 4. Okay, so far so good. So what we have is from the price level, let me just go to the 15-minute chart so that I can explain things a little bit easily to you guys. Okay, there we go. So from this price level, we have 18,888 on 1st of December 2022. We are assuming that we have an impulse in the downward direction, right? So this will be the first leg, this will be the second leg, this will be the third, followed by the fourth and fifth, right? So that's how an impulse progresses in the downward direction. The first leg down is called a 1, the next leg down is called a 3, and the last leg down is called a 5th. Right. So in this particular progression, as you can see, there is the possibility that we are currently in this wave 4. I will also discuss the counter view here. That is the possibility that this market will fly high from here. But first, let's discuss the possibility of downward continuation. So in the possibility of downward continuation, as you saw on this right hand side area, once this wave 4 is complete, we expect a down leg which should take out the last low, right? So if that is the case, then what we expect to be happening is that this market will go lower than the wave 3 low, right? This is what we expect this market to do. Now, if that is the case, then this market should not take out the last high of 18079 or 1880, roughly speaking, 1880, 1882 something, right? If the market goes higher than this high, then our understanding that there's a wave 4 under continuation to be followed by a down leg movement is going to get most likely relegated, right? So in that sense, we need to see some more sideways to bearish movement for the confirmation. Now let's discuss the counter view. So keep in mind the hypothesis one is suggesting sideways to bearish movement, sideways to bearish or straight down bearish is also possible. And let's discuss the counter view. So the counter view is that this is not a 1, 2, 3, 4, 5 impulse, but it is actually an A down, a B up, and C down. Now, why am I not taking this as the main count? The reason is that this does not seem to be having the characteristic traits of A, B, C down. The C leg is way too fast, right? And because of that, I'm assuming that this is the less likely scenario. However, as I said, if this market takes out this high, then we will have to consider the second scenario as one second. This hypothesis one as our main count. So these are the two views on Nifty 50. I have discussed both the sides as well as my own personal bias here based on the guidelines and everything, all the detailed analysis we have done so far. So let's just see the comment section here. If you guys have any doubts, you can just type it in the comments. And as I have said earlier, if you are understanding whatever we are discussing, please type in clear or understood in the comment section. So I have questions or what do you call comments from Philip here. If we go down without a B high, what's the pattern of S&P 500 and Bitcoin? So we'll be discussing Bitcoin as the last chart or the next chart basically. Okay. So before we move to Bitcoin, I have a question on S&P. So let's just quickly check what it is. What is it? If we go down without a B high, what patterns? That will be a triangle pattern most likely, Philip. Let me just see if I can load that chart. Yeah, there it is. So our analysis was that this is the A, this is the... Okay, you're saying without the B high. So in that case, you can also assume that the B is complete here. And this is following the impulse down for C. That is also possible. So there are 2-3 different possibilities. But yes, going down without making a new high is a high possibility scenario here on S&P. So let's head over to our last chart, which will be the chart of BTC or Bitcoin. Okay, so there it is on screen, the chart of BTC. Let me see. Okay, so we have been having a look on the shorter time frame on Bitcoin for quite some time now. And what we have understood or what we are seeing on the shorter time frame is that from this point of reference, which is the price level around 15,630 something, we have an A up, a triangle, and a C up. So basically, this is the minimum pattern which is required for a market to continue again in the downward direction. This is basically a continuation pattern in the downward direction is what we are seeing here, right? And because we have a continuation pattern here, the further possibilities now become either the market will continue sideways and then fall, or it can go for a WXY pattern, that it can form one more leg up before it reverses and takes out the low, right? So both of these possibilities still exist, but the possibility that there is no further downward movement currently is not on screen. That is, straight out upward flight without any downside reversal is not something we can say right now on Bitcoin. So when can we say that this market is out of the bear's grip or further downward movement is only if it takes out this high of 21,270 something level. So once this market takes out this high to the upside, only then we can say that the bearish bias is not going to play out. Until then, this market is open to further downside, and I have discussed multiple times the downside targets are the current recent, or the what do you call, the target minimum to the downside is 15 to 39. Further on will be followed by 14,780. Right. So these will be the important downside levels or the support region on Bitcoin. Our trading strategy or current outlook on this market is it is not out of the bear grip unless something happens otherwise. That was my coverage, guys, of all these instruments. So if you have understood what we were discussing here, like the content, then hit the like button on YouTube, hit the rocket button on TradingView, and do not forget to share this. This is my humble request to you guys. Kindly share my content with your what do you call, groups. If you have WhatsApp group, Discord, or Telegram, whatever you use to connect with your trading buddies, then share it over there. If you are not in something like that, if you have Twitter or Facebook, or if there is some other social media you use, then kindly share it over there. Also, you can just retweet once I post the completed webinar link on my Twitter handle. So also one more thing, you can get updates for the next webinar and all the links etc on my Twitter handle, which is at the rate of 50 underscore EYES, right? And just to give you another reminder, we do these webinars on every Monday, Wednesday, and Friday at 2 p.m. GMT, right? So if you guys want to catch on to the next best opportunity, do join me live. And again, final reminder, we have got 8 different opportunities in the last 2 weeks itself. So that was it from me, guys. And I'll see you guys in the next one. Thank you for joining in. You're welcome, Madhaji. Yes, Joe, we were done with gold, I think 3 charts before. You can just check the recording.